Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 26th, 2025, and we're diving into Alibaba's latest earnings report for the third quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Alibaba's latest earnings report provides a comprehensive look at their performance, especially in their core businesses like AI and cloud computing, as well as their quick commerce initiatives.
Revenue and profitability overview. Let's start with the top line. Alibaba reported a revenue of $34.8 billion for the quarter, marking a 5% increase year over year. However, net income saw a significant drop. John, can you explain the dynamics here?
Absolutely. While revenue increased, net income fell by 53% to $2.9 billion. This decline is primarily due to a significant decrease in adjusted EBITDA, which dropped by 78% year over year. The company is heavily investing in quick commerce and technology, which has impacted short-term profitability.
And how does this align with their strategic goals?
Alibaba is focusing on long-term growth, particularly in AI and cloud infrastructure. These investments are crucial for maintaining their competitive edge, even if they affect near-term earnings.
AI and cloud business performance. Alibaba's cloud and AI segments have been highlighted as key growth areas. What can you tell us about their performance this quarter?
The Cloud Intelligence Group reported a revenue of $5.6 billion, a 34% increase year over year. AI-related products continue to show robust growth, achieving triple-digit growth for the ninth consecutive quarter. This underscores Alibaba's strong position in the AI cloud market.
What does this mean for Alibaba's future?
It positions Alibaba as a leader in AI and cloud services, which are expected to drive significant growth in the coming years. Their strategic investments in these areas are likely to pay off as demand for AI solutions continues to rise.
Quick commerce and e-commerce developments. Alibaba's quick commerce and e-commerce segments are also noteworthy. How did they perform this quarter?
Quick commerce revenue surged by 60% to $3.2 billion, driven by the expansion of Taobao Instant Commerce. Additionally, customer management revenue increased by 10% to $11.1 billion, reflecting strong consumer engagement on the Taobao app.
What strategies are they employing to sustain this growth?
Alibaba is enhancing user experience and operational efficiency, particularly in logistics. They're also integrating more Tmall brands into their quick commerce platform, which is boosting consumer engagement and order value.
Financial challenges and strategic investments. Despite growth in certain areas, Alibaba faces financial challenges. Can you elaborate on these?
Income from operations dropped by 85% to $754 million, and free cash flow saw an outflow of $3.1 billion. This is largely due to their aggressive capital expenditure of $4.4 billion in cloud infrastructure, which is part of their long-term strategic investments.
How should investors view these figures?
While these numbers might seem concerning, they reflect Alibaba's commitment to future growth. Investors should consider the potential long-term benefits of these investments, particularly in AI and cloud services.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 49 cents. How did Alibaba's actual performance compare?
Alibaba reported an adjusted EPS of 61 cents, which is above the forecasted 49 cents. However, it's important to note that this represents a 71% decrease year over year, highlighting the impact of their strategic investments on profitability.
What does this mean for investor sentiment?
Beating the forecast is a positive sign, but the significant year-over-year decline in EPS might temper investor enthusiasm. It's a mixed bag, reflecting both the challenges and opportunities Alibaba faces.
Key takeaways. In summary, Alibaba's Q3 2025 earnings report shows a company in transition with strong growth in cloud and AI, but facing profitability challenges due to strategic investments. John, any final thoughts?
Alibaba is clearly focused on long-term growth, particularly in AI and cloud services. While short-term profitability is impacted, their strategic direction is promising for future growth. Investors should weigh these factors carefully.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Alibaba's performance in the comments below.